If you're watching this video, then you're a smart money trader or an ICT trader, whichever category of trader you are. You should be able to understand the concept and reasons for what I'm about to share with you in this video. This GBPCHF instrument looks like it's about to drop about 500 pips, and I'll be showing you how you can get the best entry so that you can have your own fair share of the national cake. Without wasting further time, let's jump into the charts. Price dropped impulsively to the downside, breaking this low, then pulled back into the origin that broke the low for a test, before continuing in its original direction. How can we benefit from this as a trader? Let's find out by first identifying the break of structure. After the break, price created a new low. Now let's highlight the origin that caused the break of structure. Next, we mark the imbalance or fair value gap price created. Then we go to a lower time frame. Let us zoom in to refine the origin and fair value gap, so that our analysis can be as accurate as possible. Looking at the chart, we can see how price pushed up, taking out liquidities before reacting on our supply zone. Zooming into the recent price, you will see how price dished out another clear break of structure, confirming the higher time frame move and giving us an entry. For entry, identify the origin that broke the structure and set your sell limit order targeting the next low or higher time frame liquidity. Comment your thoughts, like and subscribe.